Hi everyone, this is we again, Saqib and Omar. We are coming about here like with an exciting series about corporate tax. We decided that we started like doing all these kind of information based series before, but ultimately we wanted to actually discuss it in more detail. A lot of people were in different sort of dilemma that okay, should we actually do this or that? Now a lot of things are pretty much clear about corporate tax.
So let's go one by one.
Sure.
We have a couple of questions today.
Only couple.
Yeah. So on a very basic level, so on initial level, we are trying to figure out about the corporate tax. So if we start exactly what corporate tax is.
Well, corporate tax is it's a form of direct tax, which is directly implicated or implemented to the net income or the profit of a corporation. I would actually, assume that everybody knows that if a company is earning net profits in UAE, so technically it can be subject to the taxes. Now, there are different percentages, of course, which can be discussed separately.
Great. At any point of time or in any particular condition, the corporate tax is also implicate on the
Natural person, if you're referring to a sole proprietor organization, then of course it can be directly applicable to them, depending upon the type of revenue or the size of revenue they're generating. But ultimately, the individuals, if you're referring to individual income, so for example, if I have my income coming from some rental property, or if I have my investment into share market or crypto or any other direct investment I've done from my personal pocket, and I'm generating some income out of it. So there is no such taxes being levied or directly applicable to those that kind of income.
implication of the corporate tax. What is the tentatively, if you can provide us the idea why you introduce corporate tax?
The background of like taxation is pretty much very clear. Everybody knew that it is coming, and now the country is now moving from one era to another era, which is beautiful, by the way. I think it's a great initiative. It's a great opportunity for people like us, for the people who are into business, who are into SME sector especially. And the way it has been designed, the whole structure, that is pretty much very beautiful. That it is supporting the local economy. It is supporting the local SME sector, especially that you don't have to pay much, by the way, but still you're part of the whole economy. So the first implementation is been done since 1st June 2023, and since then it has already been implemented, and probably we are already gone through. We are done with the first financial period or tax period. For example, if somebody has their tax period starting from 1st July 2020, 3 onwards till the end of June 2024. So they're already done. So they are now in the timeline where they have to file the return within 9 months after the completion of their first tax period. But generally, what we have seen, even that okay, we have a lot of clients, and they most of them are having the tax period starting from January to December. So if that is the case, so the first tax period is current one, which is from 1st Jan 2024 to 31st December 2024. So they would have like 9 months period after the completion of this tax period in the next year till the end of September 2025.
Which are the organization or which type of the companies or which are subject to the UAE taxation, this specifically corporate tax?
Well, if I start with the basic one, which is the sole provider, we already discussed a lot of times, but just to clarify, of course, but if you are a natural person or sole provider organization and your revenue is up to 1 million dirhams, then you don't have to, you have the exemption, you have the immunity, and you don't need to actually go for registering for the corporate tax specifically. But if your revenue exceeds 1 million dirham, then yes, you're then liable or subject to registration of corporate tax. So that is the second part. But then if moving on to the second stage, yes, once you're registered, you have to file the return, regardless of the revenue you're generating, regardless of the profits you are generating. But other than the sole proprietor organization, there is a small business relief. Now, the small business relief actually says that if an organizational revenue does not exceed 3 million dirham till the end of 2026, so by that period, they can actually claim a small business relief. For example, let's assume if your revenue, for example, was 2.5 million dirham, but you generated like 500,000 dirhams as net profits. So out of that, 375,000 dirhams, which is the first portion, which is allocated as a 0%.
0%,
So the remaining anything over and above, which is in this case is 125,000, and that will be taxed at 9%. So technically, it becomes a liability for you to pay. But eventually, because you have not generated enough revenue, which is more than 3 million dirham, so you can actually opt for, by the way, you have to opt for it. That means during the return filing period, you have to opt for this small business relief. And if you opt or elect for this, then you can be subject to relief and you don't have to pay.
Perfectly fine. Can you please clarify that till 2026, this point?
So
What's
basically, this relief is only available till 2026.
Okay.
Till the end of 2026, whatever periods are there coming in between. So it has to be consecutive. So if you have generated less than 3 million dirham in 2024, you're subject to this, and you want this, and you have opted for this. But eventually in 2025, if your revenue exceeds 3 million dirham, then you are not subject to the relief. Then you have to pay all the tax liabilities, of course.
GCC nationals or UAE national, they also have to.
It's pretty much straightforward, yeah.
Okay, so there is no.
There is no such differentiation.
Okay.
It's all about the type of legal structure of the business. If that is doing the commercial activity within UAE, so that can be subject to corporate tax, of course. But regardless, even if you just put it aside and you start thinking about most of the companies which is in the SME sector or upper size SME or corporate sector, they are LLCs, for example, limited liability companies.
Okay.
Whether they are in free zone, whether they are outside the free zone in mainlands. So they are LLCs. So every single company had to register.
Okay.
And this registration period's already ended almost for almost every company. And a lot of companies are getting fines, by the way, of 10,000 dirhams for late registration. By the way. Yeah.
The differentiation between the VAT and the corporate tax.
So VAT is basically it's a tax which has been generated from the consumer of the product and service, just in the simplified terms. So if I am consuming any product, so I'll be the one which is paying that 5% on top of that product, of course. And if I'm consuming any service, if I'm consuming any product, so I'll be liable to pay that 5%. So ultimately, during the whole supply chain, one person is charging the other one, but then claiming it back against the paid amount, and then eventually it reaches to a point where this product or service gets consumed. Then that 5% goes to the government. So this is the VAT scenario, which is generally in other part of the world we usually call it a general sales tax or value-added tax generally. So it's almost the same thing. But on the other hand, the corporate income tax is directly applicable to the profits being generated by the companies.
So VAT is categorized as an indirect taxes.
Indirect taxes,
and
yes.
corporate tax.
It's a direct tax.
Categorized
Yeah,
as
that's
a direct
correct.
tax. Being a little bit down with those businesses who are not very huge businesses. Those businesses, they hardly maintain their records, and they are just following because mostly
Understood.
VAT
Understood.
is for the sales and the purchases.
I
They do
understand.
that.
It's a
and
very
they-
simple one, yeah.
Very simple.
5% paid, 5% received,
Exactly.
and contra entry net off, and that's
Now
it.
at this point of time, we are already standing in November 2024. The time is
So
very
let's
less.
be clear for the SME. You're referring to the SME, right?
Yeah,
Or the lower sized SME. So let's go one by one. If they are sole proprietor and revenue is less than 1 million, they don't have to register.
They don't have
Simple. But they have to maintain the records, of course. Right?
The maintenance
That
of
does not mean
records
the maintenance of record has to be there. Of course, they cannot just avoid maintaining the records and just simply saying that, okay, my revenue is not more than 1 million dirham.
okay.
It can't be like this, of course. So
So
this
you
is
have
one
to
part.
prove that
You have to prove
are
that
under
your
1
revenue is
million.
less than 1 million dirham. Now, the second part is, of course, if you are LLC, limited liability company, generally, like within free zone, outside free zone, doesn't matter. Within any jurisdiction of UAE, you have to register for corporate tax. So first thing first is, have you registered for corporate tax? Number one. If you have registered, so the second thing is that your revenue is exceeding 3 million dirham or not. For example, if that revenue is not exceeding 3 million dirham, let's assume for the very small companies or organizations like small stores and all that kind of people, right? Or traders. If your revenue is not exceeding 3 million dirham, so then you can actually do your accounting on cash basis. This is one thing. So for example, you paid money, you received money. It's a very simple calculation. How much you paid, how much you received. Against that, how much you received in shape of your revenue, how much you paid in shape of your expenses. Of course, there are some expenses. They have to be strictly the business expenses. But then what is your net income? So that net income can become your, of course, subject to the corporate tax. This is one part.
Okay.
Now, this one part is that you can be subject to corporate tax liability, but you have to actually calculate if your revenue is not exceeding 3 million dirham, go for the cash-based accounting. Simple. That's okay. But if your revenue exceeds 3 million dirham, then you have to adopt the proper reporting mechanism, which is, of course, the accrual-based accounting. And then you have to calculate according to that. So this is the second category. But if your revenue is already exceeded 3 million dirham, so of course you are specifically subject to the accrual-based accounting, and then you have to have the proper, books of accounts and everything. Now, there has to be a clear distinguishing. You have to clearly distinguish between the business expenses, non-business expenses. When I say business expenses, that are strictly for business purposes. If the business is paying anything for the sake of maintaining the lifestyle of the owner, that is not a business expense. So technically, it should be removed from calculating the corporate tax liability. So these are the steps or stages you have to go through.
So in nutshell, in all your discussion, wherever you are falling in whatever scenario, you have to have maintain the books of accounts.
Correct.
Whether if you are
Absolutely,
under that fund, you can do
110%.
the cash
110%.
basis or the accrual
Absolutely.
basis or whatsoever.
Books
But
of accounts has to
prove
be
that
properly
one,
maintained.
properly
Now,
maintained.
you already know yesterday when we were discussing about the e-invoicing, which is going
Yeah,
to be
exactly.
implemented
Yeah.
from June or July, probably 2026.
Exactly.
So once it is rolled out from 2026, that means all your invoices or the way or the mechanism of invoicing will be linked to the system. Right? So ultimately, they are going to completely remove one part of your record keeping or reconciliation or everything which you are manually inputting, of course, into the system. So that'll be completely removed. Ultimately, what would happen? So once you are going to file for the return, let's assume CT, let's assume VAT. So your revenue record would always be there in the system of Federal Tax Authority. You don't have to actually do their input.
Exactly.
So it's gonna be very, very, what do we say? More smoother, more structured, more
Right, and in a
structure,
very,
exactly,
controlled
and control environment will be there, of course. Yeah.
Exactly. So we talk in previous podcasts as well about the exempt, which are the business are exempt, are the exempt activities, if you can briefly let us know which are the
Look,
exemptions.
honestly, when we say exempt activities or qualifying free zone activities or what has to be done and what not has to be done, let's assume there are two. If somebody is asking me, so I try to distinguish very in few things. If your business is in mainland and you are generating or doing the commercial activity and you are individual businessman or individual business, you do not have any links to other part of the world, you do not have branches, you do not have subsidiaries, you do not have parent company and all that kind of stuff or headquarter. So ultimately, let's assume that your small business in mainland is going to be subject to corporate tax. That's pretty much very simple and straightforward. Okay. How to calculate, when to file, how to calculate, are you subject to any small business relief? So those are the discussions which you have to do separately, but you have to register and you're going to be subject to corporate tax. This is number one. Let's distinguish between the free zone companies and mainland companies. When it comes to the free zone companies, of course, then we have to have further you have to distinguish between one company which is subject to a relief being inside the free zone and generating qualifying free zone income. Or the other company which is not generating the qualifying income, and that will also be subject to any non-exemption, or they'll be subject to any full-fledged corporate tax rate. So this is the part number one, mainland, simplest form. Part number two, free zone company. Then you have two categories. Category number one, which is some company which is subject to the qualifying income exemption, or the other one which is non-qualifying income generating company. Let's assume a company within the free zone, and it's a very important aspect, and that company is providing service, right, to any other free zone company.
So free zone company
Providing service to free zone company. Simple, the simplest one. But the service is meant to be utilized by the free zone company, and that will be utilized within the free zone.
in the free zone.
Then technically it is also exempt income.
Okay.
It's a very important aspect.
Okay.
So for example, if you are into accounting, if you are into finance related services, if you are into payroll management, marketing services, or any other specific service, so one company providing service to other free zone company, and that service is going to be utilized, the recipient is actually utilizing that service for itself
Within the free
within the free zone. So of course they can also get the party which is a supplier can also categorize that income stream and carve it out and saying that, okay, this is completely exempt. Simple.
is completely exempt.
So I'm not paying any tax on that. So this is number one.
Okay.
Number two is the qualifying income stream. So there are certain categories which we explained multiple times. Let's assume your revenue is strictly related to qualifying list of one of those, one of the list of qualifying free zone activities. This is very specific, right? So 1, 2, 3, 4, 5, 6. But then you have to see there are few activities which are directly related to the we call it designated zone.
Okay.
So if you are doing, for example, manufacturing of goods, distribution of goods, so they have clearly mentioned that these exemptions or these activities which will be considered as the qualifying free zone activity,
Okay.
that company has to be doing that activity or performing that activity inside the designated zone, which can be, of course, we have multiple examples of that, Javza, Safe Zone, Humri, and all other. So, but the other than that, all other activities which can be performed in non-designated zones or simple free zones, but those has to be performed according to the guidelines. If the company is performing that, for example, let's assume, and then on the other hand, they are also performing some non-qualifying free zone activities. So then they have to go or move into a second categorization, which is called the de minimis requirement. So then they have to see that, okay, first thing they have to calculate, according to the guidelines, they have to calculate the total revenue of the company, number one. Number two is, once that is calculated, then they have to see that if the non-qualifying revenue or non-qualifying income is the more than 5% or less than 5% of the total revenue, number one.
Okay.
Number two is either that is less than 5% or it should be less than 5 million dirham in the total value. If that is the case, so it is ignorable. So that means you will actually consider the whole revenue or the total amount of revenue as the non-qualifying, the qualifying income.
Qualifying income. Okay.
Qualifying income in that case. But let's assume if that is not the case, and that becomes your non-qualifying revenue is according to the de minimis requirement, it is more than the 5% or more than the 5 million of the total revenue. In that case, it becomes subject to the total revenue. Even your qualifying income will become subject to the taxes.
Okay.
And the tag of qualifying income free zone generating company or qualifying free zone company or qualifying free zone person will be technically removed from your company for the current period and 4 consecutive periods.
Okay. It will be
Not only for
consecutive.
one period, by the way.
The next
So
4
if it
periods.
is removed today in this period of 2024, so it will be removed for next 4 periods as well, up to 2028.
Okay.
Okay. So then after that, you can reconsider becoming of qualifying, free zone company. So every company has to be very cautious about these things.
Can you clarify a little bit on the who should be considered as a resident in respect to corporate tax and who considered as a non-resident company?
So the difference between the resident and non-resident is pretty much very clear. So if I just say that what is resident company? So if a company is incorporated, any incorporated company or corporation such as LLC, PSCs, PJSCs, which is public joint stock committee companies, any other company or UAE juridical persons, that'll be considered as the resident person if that is clearly being registered within the UAE jurisdiction. That is the resident companies. Now, any entity which is not registered within the UAE, but they are actually directly, effectively, managed or controlled, I would say, outside the UAE, technically.
Okay.
So, for example, if under this corporate tax law, I would actually just assume a juridical person which will be considered as a non-resident person or non-resident company, if it is incorporated in a foreign country, for example, it is registered and controlled and managed outside the UAE. This is considerable, simplest form. That means that is considered as a non-resident company or non-resident person. Why do we have to actually distinguish, or why we have to have 2 separate tags? One is resident or non-resident. Because if there are many non-resident companies which come for a very certain or small period of time to do some business activity, for example, some companies would come for some specific assignments, right? Drilling or construction or development or services or consulting or marketing or doing some stuff, and that's it, and they'll be gone out, right? So during that period, if they are generating or doing any commercial activity, so that has to be, of course, subject to some sort of juridical controls. So that's why we have to segregate.
What about the self-employed people like freelancers and those people who are working as a sole person?
Employed person, of course, if they are doing any business activity as a self-employed, and they are doing any freelancing activity and generating the revenues or profits out of it, they will also be subject to corporate tax, because the corporate tax, the overall mechanism is designed for the taxes on the business activities profits. So yes, but ultimately the 375,000 like exemption of like up to 375,000 dirhams worth of profits will be subject to 0%. Anything over and above will be taxed at 9% within the same timelines, of course, or limits.
So rest of all those things like 1 million rule, 3 million rule, that's also be get implicated.
But ultimately, if it is a freelancer, right, and revenues are less than 1 million dirham, so natural person, of course. So yes, if it is more than 1 million dirham, yes, they have to register, they have to file the returns, of course, in the similar way.
Okay, correct. Thank you so much, Mr. Saqib. Thank you so much. It's a lot of information we have clarified on a lot
No,
of things.
the people has to understand that this is not going to stop here, of course. We both are here to explain people's questions, of course. What exactly we can do is, this is how we decided, of course, that people can actually leave their comments under our videos, number one, in shape of any question or query. So our tax team would always be like there to help them for answering their questions. So even we can actually accommodate or incorporate those questions in our upcoming, of course, episodes. So this is how we are going to actually help the local business community, of course.
That's
So
great.
this is our aim, of course, right?
Great.
Thank you so much, Umar, for asking all these wonderful questions. I believe that a lot of information has been